Good afternoon. Please join me in welcoming our webcast viewers. My name is Gillian Riley, and I have the distinct pleasure of being the president of the Canadian Club of Toronto and your host for today. Well, thank you, Tim. Viewers, thank you for joining us. Our club strives to offer you a diversity of speakers who address current issues. We are conscious of Canada's rich diversity and strive to reflect this not only in the topics, but in the speakers who present them. We are proud of our club's track record of providing a forum for decision makers, cultural icons, and thought leaders. Today's panel of experts is a great example. Before I formally introduce them, here is a snapshot of some upcoming events that we hope you will consider joining us. On Wednesday, June 6th, we have Marianne Yule, the President and CEO of HP Canada. She'll be here to talk about women in tech, talent, and diversity. And on Tuesday, June 12th, Achievement Award to the Right Honourable David Johnston, former Governor-General of Canada. To order tickets or to learn more about the club, please visit our website at canadianclub.org. You can also join the conversation via Twitter and Instagram by following us at CDNCLUBTO or by using that hashtag. Today's event is being made possible by our sponsors in part. First National Financial, represented by Lisa White. Thank you so much for your generous support, and Stephen as well. I would also like to add a special welcome, and if I could ask you to stand, to our youth and young leaders from the Rotman School of Management. We're very glad you're here today, so please stand up. So let me introduce our expert panel. Club Vice President Bruce Sellery will moderate today's discussion. He is a well-respected personal finance expert and best-selling author. He is a columnist for Money Sense and appears regularly on CBC Radio, Cityline, and Breakfast Television. And he is also a Queen's grad. That's going to become important. Joining him are Romy Bowers. Romy is Chief Commercial Officer of Canada Mortgage and Housing Corp, or otherwise known as CMHC. She is responsible for leading the corporation's securitization and mortgage loan insurance businesses. She joined CMHC in 2015, and prior to that, she worked at a large Canadian bank. Stephen Smith. I like that. Stephen is one of Canada's leading financial services entrepreneurs. He is the Chairman, Chief Executive Officer, and co-founder of First National Financial Corporation. He is also the Chairman of Canada Guarantee Mortgage Insurance Company, which he owns in partnership with Ontario Teachers Pension Plan. And Stephen I've known for a number of years, and we're delighted to have you today, so thank you for coming. Tim Hudak. Tim Hudak is the CEO of the Ontario Real Estate Association, also known as OREA, Canada's largest provincial real estate industry association. He has enjoyed a distinguished career in public service, including 5 years as leader of the Progressive Conservative Party of Ontario and leader of the official opposition. So I'm sure you're watching this election with great interest. Members and guests, please fill out the Q&A cards that have been provided at your tables if you have questions, because I know Bruce will be looking forward to asking them further on into the session. So we're excited about today's panelists. I think it's a great topic and it'll be a great discussion. We have experts from all part of the real estate sector, and we look forward to the insights. So thank you for coming, and I'll turn it over to you, Bruce, and your panelists.
Great. Thank you very much, Gillian. Hello, everyone. I think it is fair to say that we all have a horse in this race. We all have a horse in the outlook for the real estate market in the GTA, and it may be personal. We may be thinking, what's going to happen to the value of my house? In my case, I have an 8-year-old, and one of my questions is, will she ever be able to afford real estate in this city? Probably not, which is why I'm saving her toddler bed, so my grandchildren can just live in the basement. It's going to be totally fine. I've sorted it all out. But many of you also have a professional question about the outlook for the real estate market. You may be realtors. You may be people whose businesses are directly or indirectly indirectly affected by the health of the real estate market, even insofar as you want to hire people who could actually afford to live there within 50 miles of the city. So by way of context, we all have a horse in the race, and we're going to leap right in, Stephen, with you. In a word or a phrase, how would you characterize the state of the housing market in the GTA today? You can use words like oaky or with notes of aubergine or, I don't know.
Yeah. I would say, if a word, I would say the real estate market here in Toronto is good. What we've seen is there's been a lot in the press with respect to a perception that the real estate market has collapsed. I don't think that's the case. What we've seen, probably a drop in sales, particularly over the frenetic levels of March and April 2017. We also see a little bit of a diverse market. If you go to the 416, particularly the condo market, that market is still very strong, and I think some of the realtors here would tell you still see situations where there'll be offer dates and you'll still see multiple offers, particularly on condominiums. The single family market, still good. In the outer line area, you're seeing a market not quite as strong. However, in the overall context of a market, I think one has to look at the fundamental economics underpinning the real estate market, both here in Toronto and also in Canada as a whole. We have historically lower interest rates. I know the millennials here won't remember double-digit interest rates, but there are one or two people here, including myself, who do remember rates in double digits and even 21% interest rates back in 1982, 1983. Low interest rates, a very healthy economy. For the metropolitan areas, particularly GTA, a lot of immigration. All that gives a fundamental support. And there's another factor here. We certainly have significant supply constraints, both in the Toronto and the 905 area, which has tended to affect supply.
Romy, what would you say by way of overview? Not from 30,000 feet, but from the 60th floor of the Shangri-La. Like, how are things looking?
So I think I would agree with the comments that Stephen provided. I think if I could add something on the supply side, one of the things that CMHC is specifically focused on right now is supply, especially in the multi-unit space. As you know, the vacancy rates for apartments and condos that are being rented out are at historic lows. And there's a recognition that that lack of supply contributes to some of the froth in the market. And I don't know if you've heard about the federal government has recently announced a national housing strategy. And a key element of that is to increase supply, especially in more affordable housing and particularly multi-unit rentals. So I think that's an area where there will be, and it's the government is doing its part, but it's an area where the private sector and all levels of government need to play a role in increasing the supply there.
Tim, your summary.
Solid.
Solid.
Look, I think we're going through some short-term uncertainty because there's a lot of flux in the environment when it comes to, and I know we'll get to this, Bruce, in a bit, a lot of intervention by governments that seem to want to save us from ourselves, that want to stop people and quell demand. I'll make an argument today that the real issue is supply. We have more and more people chasing fewer and fewer homes. So in the short term, best thing, get advice from people that know their financial services. Get advice from a good realtor who knows where that neighborhood is going to go. That's the short term. Long term, really good. Look, the Greater Toronto and Hamilton area is doing very well when it comes to our economy. That means we're attracting people from across Canada to live here. We are one of the most, while we have our warts, one of the most tolerant places in the world for immigrants to come to that are contributing to our economy. That is a good thing. You've got a whole wave of millennials who are coming to the marketplace. That is a good thing. And while mortgage rates will be trending up somewhat this year, we have long, low mortgage rates. 4 big drivers of demand, limited supply. That means it's a very smart investment, medium and long term.
I did a speech yesterday at the Treb Realtor Quest,
Yeah.
this massive event up by the airport. And one of the things that struck me, not surprising, I guess, was talking to realtors who represent different parts of the GTA. Etobicoke, woo! Riverdale, woo! Richmond Hill, I need to start a job at a call center because it's pretty much done here. So how do you address the differences in urban, suburban, condo condo, single family, because it really is a very, very different market. I want you to speak to some of the negative stuff. And the reason why I want you to speak to that is I don't want that, it's not that it's the theme, it's just what we've been hearing for so long from so many people is, great long-term investment, Toronto's fantastic, it's diverse, and that's not accurate across the board.
Yeah, well, look, I mean, that's what I said in my opening comments there, Bruce. Like, you got to get advice. Different neighborhoods may be going in different directions. There may be a significant lack of supply, in particularly pockets in the Greater Toronto and Hamilton area, which means a good thing, right? Basic economics, you've got limited supply, you've got demand, prices only go one way, and that's up. But always get the best advice from the ground, from a realtor who knows what's happening in that neighborhood, what's coming in. I remain very optimistic about the housing market. I think Ontario is working. I think the greater Golden Horseshoe area is a success story in North America. Any of those factors I mentioned, where it's long, low mortgage, state of the economy, immigration, millennials, I don't see any of those going backwards in the near future.
It's also kind of your job, like a little bit of your job. But I only say that the constituents you represent have a vested interest
I know
in
who
you being
pays my
positive about their
bills.
city. Yes,
Just because I spent
Evidently.
21 years in politics.
yes, you know how this goes. It's good. I want to ask Stephen for your view on supply. So there are so many, there's so many topics, there's so many ways to address it. What do you think are the big ideas on the supply side? Romy mentioned multi-unit. What are some of the things that you see as?
Well, I have to applaud what CMHC is doing with respect to supply. I mean, CMHC has been helping Canadians to find housing and supply housing since 1945, and they've done a wonderful job over that period of time. The recent innovation to provide multifamily housing is great. I think we feel it's a real issue. I can't think of a more visceral concern to most people than the ability to house their family. And we're seeing a situation, certainly in Toronto, where it's really not affordable. It's been that way in Vancouver for a lot longer, but certainly where we look at ourselves, depending where you are and your children, not to be able to find the appropriate housing. A big component of that is certainly there is the component of demand, and we have to wrestle to some extent. They use the term, and I think it's a terribly overused term for a world-class city for Toronto. But to some extent, if you look at cities in parts of the United States, Australia, there are cities that have housing similar to ours and a similar supply constraint. But certainly in Canada, or rather in Toronto and in the 905, it's really tough to get things built. And we're all at a fault here. I think everyone saw that article a year ago about they were building a condo on Davenport Road. In back of Admiral Road, where Margaret Atwood and some other influential, and everyone's supportive of intensification as long as it's not 200 meters within my house. There's another thinking here, the way we look at housing still. In New York, London, Paris, people think, well, I live in an apartment. If you were to suggest I'm going to raise my children in an apartment now, they might call in Children's Aid for child abuse. And so there's a view that psychologically here, we still want single-family housing. We want the semi's a compromise, the single detached house. So we have to deal with the supply constraints. To a large extent, municipalities, both the city and elsewhere, have taken the approval process out that it's long, it's extended, it's costly. And they've also, through development charges, to a large extent, look at this as a bit of a cash cow, not fundamentally understanding that's really costs going back down to the individual home buyer. So we have big supply constraints.
Romy, on the urban front, you talked about multifamily. What else do you see as being big ideas on the supply side within the city?
Yeah, so I don't know if it's a big idea on the supply side, but I think I like to make one point about home ownership, which I think is a great thing. And one of the great things that we do at CMHC, a lot of on the mortgage loan insurance side, most of our clients are first-time home buyers. So every year through our insurance programs, we allow access to housing finance for first-time homeowners, and that's a great thing because your home is not only a place that you live, but it's also a way to accumulate wealth. So that's really great. And what I worry about, not just as a CMHC employee, but as a Canadian, is when you see house prices escalating at a level that's not really supported by the underlying economic conditions, it creates a divide in our society between people who have houses and people who don't. And I think, as a Canadian, that idea of having an inclusive society where if you're a school teacher or a nurse, you can live on the same street or the same neighborhood that you do. And if that doesn't happen, I think it's going to change Canadian society a lot.
Absolutely.
So I think we need to, as Canadians, we need to think about that and think about what actions we can take to prevent those kind of things from happening. And it's a complex problem, and there's no silver bullet, but I think those are discussions that I think we need to have at the national level for sure.
Tim, what do you think should happen with the Greenbelt?
We don't need to actually touch the Greenbelt. Here's a couple things. There's actually plenty of land that's been designated to meet future demand on housing supply, and whether that's detached homes, semi-detached, or high-rises. The problem is, and don't forget, the Greenbelt's quite a ways out. There's a couple of belts out. Problem is that land that was designated back in 2008 under the Greenbelt Initiative for housing supply, we can't touch. Why can't we do that? Well, government has not been wise enough to deploy infrastructure funds that way. Like, you can't sell a house if you turn the tap on and there's no water, if you can't drive up your car in the driveway. So there's land there, Bruce, but you got to make sure that the infrastructure funds that are announced in every single provincial or federal budget reward municipalities that are opening up land for housing supply that has been designated for housing supply. So put that into water, sewer, put it into roads, put it into rail. That will make the difference on the outer side. Within the cities, the urban footprints of Toronto or Hamilton or whatever intensify. Like, isn't it kind of nuts, right? Look along the Bloor Danforth line. You've invested a lot of money, or the province, rightly so, along Eglinton.
Totally crazy.
And you're limiting it 2 or 3 stories? Like, does it make sense to put billions of tax dollars into the ground and then limit development? So there's a hell of a lot you can also do in the city.
Yeah, but we all have to blame for that. I mean, we see Bloor is a good example. The Shepherd subway is another example where everyone supports the subway, but they don't want intensification. And that's because the local, all of us who live in those areas, when it goes to build that high-rise, people come out and they protest against it, and it's voted down, and they can't get the rezoning.
Yeah, so you should make it. My suggestion on this, and to the credit, we sat down with Premier Wynne, put these ideas on the table. She's implemented some of the ideas that the realtors brought forward. By way of example, as of right, you could intensify around GO or TTC stations. It makes a hell of a lot of sense. A lot of Canadians would probably kill to live in a condo above a subway station, at least for part of your life. Don't put the coat on, the boots, just
Maybe not kill, maybe maim, but I don't think kill.
In this environment.
Yeah, well, I guess.
Yeah.
And you're a politician by background.
So that was a good step forward, right? But folks remember Doug Holliday was the mayor of Etobicoke for a while. He's deputy mayor in the city of Toronto. Doug always said, before you commit to any new subways or rail intensification, make sure it's zoned ahead of time, so you can actually build up around that. That makes sense, and I think that helps address the issue that Steve rightly brought forward about NIMBYism. Do it ahead, and the province has got to be the muscle here to actually demand that before they put a penny into it.
There are a number of potential scenarios, Tim, in terms of how this provincial election goes. One would have Doug Ford be the next premier. If that were to occur, what would you expect for the realtors that you represent?
So all 3 parties, we've actually done an analysis and a release through, again, AREA's, and AREA.com is our website. Or you can follow me on Twitter, Tim Hudak. I host a radio show on Sundays. And so the conservative approach, now the conservative approach platform, just because of the timing, I think, the leadership changes, is limited, right? So they're pro-home ownership. They talk about attacking regulations and delays that slow down housing and make it more expensive. Sort of the general approach that Conservatives would take. I talked a bit about the Liberal approach around intensification, some good moves in that direction. The NDP, to their credit, too, have suggested that we should have a greater right as homeowners to have more granny flats or laneway housing, open up more on the affordable housing side in the neighborhoods and force their way through. So we actually see in all 3 parties some bright lights on the policy side, some things we're concerned about, but they all have positive things in housing supply.
That was a great hedge your bet.
Thank you very much.
It was amazing. Whoever wins, I love them. Stephen, what about you? When you look at the provincial election through the lens of housing, what do you see?
Well, I think I would agree with Tim's view on that, but a lot of housing still comes at the municipal level. And I would think you would see municipal policies that tend to be at variance. A good example would be the recent changes to the OMB. Huge pressure from all the municipalities. Well, we want to control things. We want to control things. That's certainly very anti-intensification. I think in the past there'd be an approach that would come up. The local councillor could oppose it, with knowing that in the end the OMB would approve it. Now you're putting more power back in. And I think that would be one of, if I saw one thing one thing that one could do is leave the OMB the way it is rather than implementing those changes.
Romy, I want to follow the other side of the supply and demand curve here and ask you about this big question of whether or not home ownership should continue to be such a core Canadian value. Home ownership is very, very high in this country. It is not high in Germany. It is not high in Switzerland for lots of historical reasons. But I'm wondering if we need to recalibrate the importance of home ownership, given that in many markets, the math doesn't make sense. When you look at what you can pay to rent versus what you will pay to own over time, provided you invest the difference, the math doesn't make sense to own.
Yeah. And I think, I think in Canada we have one of the highest rates for home ownership in the OECD, and I think that's a great thing. But I always think it's about choice. I think it's great if you want to be a homeowner, you should be able to afford a house, a single detached house or whatever you want. But if you don't want to own a home, but you want to rent an apartment and you want a certain type of apartment, there should be enough supply in the market that you can make choices about where you want to live. I think it's all about the entire housing continuum and different choices in home ownership. And I think, these gentlemen, we've discussed different barriers that's preventing supply from being created. I think we need to really look at that so that Canadians can actually have a good choice about where they can live and it's affordable for as many Canadians as possible.
Well, I want to take this on because we often talk about these issues like there's two species of human beings, right? You got renters and you got owners, and never the twain shall meet. It's a bunch of nonsense. We go through most of our lives in various stages. Most of us start out as renters. Most of us then become homeowners. Sometimes in retirement you become renters again. So this notion that there's two, alien species, I think takes us off what's truly important here. One of the things that motivated me, Bruce, when I was in politics and now in my new job, real estate, and one of the reasons I made the move, was because home ownership changes you. Think back to the first home that you bought. I remember when Deb and I bought our first home in Niagara in 2002. It changed me as a man. I cared more about my neighbors. I gave a crap who they were. I got to know them. You get more involved in the community. You're more likely to volunteer. Home ownership helps the economy for sure, but at the end of the day, it actually strengthens the social fabric. And we might say home ownership's high. Actually, there's a lot of European jurisdictions with far higher home ownership rates than we have. Ours is actually in decline right now. My advice, and I did this walk the talk in government, everywhere that we can support home ownership as good public policy is a good thing.
You did a report in partnership with the Ryerson Centre for Urban Research. One of the phrases, vast majority of millennials will prefer ground-related homes. I used to live in New York City. I would have really preferred a one-bedroom apartment in Manhattan, but what I could afford was a fifth-floor walk-up. So that's what I had. How do we reconcile what people want, like unicorns and rainbows, with what they can actually afford, which is the reality of pricing in the city?
Yeah, I say a few things on this, and Steve and I have talked about this personally as well. So I know there's this view out there that millennials are somehow different, that millennials, because they've got a cool nickname for their generation, are different from Gen Xers or boomers and such.
That's right.
So it turns out, we work with Ryerson University, and Cherie's Berta here from Ryerson University. We're with our colleague, Frank Clayton. We said, okay, let's actually test this out. How about this? Why don't we ask millennials what their intentions are? Turns out they're human beings, just like the rest of us. They actually want to own a home. Now millennials are moving into the market where they're getting promotions at work, they're earning more money, they're starting to have families and have kids. And it turns out this myth that they want to live in shoebox rentals in the sky is not true.
I don't think that was ever a myth. I think that it was a reality that when you're earning what you're earning in the city, you might be able to afford a shoebox in the sky. You can't afford a 2,000 square foot home in Riverdale or Rochester.
There are people who want to control growth that make this assumption that millennials want to rent forever. And it is not true. We asked millennials, a sample through Nick Nanos, about 1,000. We said to them, do you believe that the concept of home ownership is outdated, that it's better to rent? 17% agreed. That's actually less than the number of people who rent on average in a province who want to own homes. I think it's fair. Houses are more expensive. That means they buy later in life. They may have more less space than their parents did. But they want to own, and as they have families, their preference is for detached or semi-detached housing. Is it always affordable? Some will go farther away and drive in. Others will look for what we call the missing middle, like stacked townhouses, a bit more space in the middle of that. The risk, though, is if we don't actually build more choices in the marketplace, the most educated generation in the history of our country, millennials, will pack up and head to other provinces or into the States.
Yeah, but we did discuss this, and I entirely agree with you. Millennials are just like anyone else. You have the same desires with respect to your family. I think it just gets back to an issue we now have big demand in Toronto, huge immigration, strong economy, and how do we deal with more supply? And then what type of supply? And I would say two things. We're not getting the supply because we don't have the type of legislation or the desire within our municipalities to put those supplies in. So there's a lot of people in the city who now have a single family home. They don't want it's a strong source of NIMBYism. They don't want the intensification on the Bloor Street line. They don't want the intensification on Yonge Street or Shepherd. They don't want to take land use policies that will give us the type of intensification that we can fill all the people that we have. And that's maybe a choice of the municipalities and the people who live in them, but it certainly will start to make housing here increasingly unaffordable. It'll be a point where people will not be able to afford to live in downtown Toronto in the same way you can't really afford to live in downtown Manhattan or London or Sydney. And it's a tough problem.
Romy, I want to weave in the regulatory changes that we've seen provincially, federally, foreign buyers, the stress test, all that. What would you say, how would you characterize the effect of those regulations from your perch?
Okay, so if I could do a little bit of a history lesson here.
Yeah.
And this year is the 10th anniversary of the financial crisis, right? So from a CMHC perspective, we played a pretty active role during the financial crisis, keeping the housing finance credit supply going. And as a result of that, our balance sheet grew pretty big, right? And so over the last 10 years, there's been, at least at the federal level, there's been, regulatory changes made to shrink the size of the government exposure to residential housing, and it's been gradual, but the size of the insured market has certainly been decreasing, and from my perspective, I think the policy changes have had their intended effect in terms of preserving the stability of the housing finance system in Canada.
Stephen, for you?
Well, I'd actually be a little bit at variance with you on that. The Government of Canada, CMHC, and the other private sectors collect an insurance premium that's actually really determined. I think a lot of the changes introduced by the Government of Canada in 2016 over a period of time has had the perverse effect of reducing housing supply. And a good example would be in 1630. People talk about B20 and the changes. Well, that's 70% of the market. In 2016, 30% of the market was insured. The government put the effect of B20 there. Now, that doesn't have an impact in Toronto, but outside of Toronto, insured mortgages are a big part. So in the way I find the government policies contradictory. On one hand, CMHC is launching, which I applaud, this ability to build more rental houses, but at the same time you introduce a policy that you cut the high ratio market by about 20%, which was the case in 16. So I would think you're probably net negative on the terms of housing that you're bringing to the marketplace. So I'm probably not quite as sanguine about the government policy as you are, Romy.
Tim, a big part of those policy changes has been psychological, for people to think, geez, things are constrained, I don't know how this is going to work, so part's tangible, part is intangible, at least I would argue. What's your take on the regulations as we have seen them this far and their impact in the marketplace?
Remember I said at the start where it's in some short-term uncertainty? That comes from regulatory overkill. Governments have gone far too far. Look, I know government saw a steamy housing market in the spring of 2017. The problem is that they all piled on. You had the City of Toronto brought in new land transfer taxes, the province brought in the Fair Housing Plan with the strict rent controls, foreign buyer tax, and the national government, I think, has been a disaster for the aspiring middle class. And let me tell you why. 21 years I spent in the political world. I dealt with a lot of regulators. I respect the work they do. They're important referees in our system. It's important for them to be objective. As such, especially OSFI, not CMHC, OSFI, is these high priests of numbers. So they bring in this stress test that actually is punishing careful savers, people who have paid down their mortgages, that are good investors, that have been careful in their investments, so they can't now move up in the system. So let me put a human face on this. I know I'm going on a bit long about this, but look, I think like a lot of people in this room, you know, my family's story, my grandparents came from what was then Czechoslovakia. They came to Toronto, and they worked their tails off because they wanted to buy a home. Where they came from, owning private property was not something you got to do. So my grandpa worked two really full-time jobs. They rented out the upstairs to another family so they could pay for a house. Your story's probably a lot like that in your family history or yourself. Today, they wouldn't qualify because of the stress test. So the human face on this, new Canadians, young Canadians, entrepreneurs are being punished by regulatory overkill. My advice to governments of all stripes, hit the brakes, ease off, and in an era of increasing mortgage rates, take off that stress test or loosen it up to another option.
Stephen.
Well, you know, I think I'll disagree. In 30 years, I've never seen a representative of a real estate association ever say, "Oh, too much." I've never heard anybody from.
Do you mean too little?
Too little.
Regulation.
They've always been opposed to regulation, anything that affects immediate sale. I think the B20 stress test on conventional mortgages was a prudent introduction of government policy. I think it was measured. We have a concern here about an asset bubble that can potentially, if it would to burst, could have a negative effect on the economy as a whole. I think the Bank of Canada and the government's very concerned about that, and their introduction of B20 on conventional mortgages under 20% is a measured, considered response to increasing asset bubble pricing, particularly here in Vancouver.
And if I could pile on that one a little bit, and I'm not usually a defender of OSFI. I used to be a banker myself, but I have to say that you know, I think when I mentioned like the financial crisis, I think Canada did pretty well during the last financial crisis, and I've had the privilege of working in the U.S. and I understand the regulatory system there. But I think as Canadians, we're very well served by the regulatory system here. I know it's not perfect, and it's not people, the regulators like everyone else, they don't get it right. But I think the people who work in those regulatory agencies, they look at these things very carefully, and they do make these policy decisions with care.
Stephen, I want to ask you for your medium-term look on rates. And the reason is the context of the stress test really is in providing the surety that consumers can afford those payments over time. When you look 5 years out or 10 years out, Canadians' mortgages will not be paid off in that time. So those rates will be real. They'll affect their monthly cash flow. Where do you think we will be in 5 years? And I know it's crystal ball, but is there a case to be made that we are headed to the historical average of somewhere 5 to 7%?
Oh, I don't think we'll see it be up to 5 or 7%. I guess when you rates, let's say the Government of Canada bond yield today in 5 years is 2.10. I guess if I could forecast rates, I wouldn't have to work for a living.
You've done pretty well for yourself. I don't actually think you have to work for a living right now. I think you're good.
Well, work that hard.
Yeah, I understand. So rates will be where in 5? Now is to put the money on the line.
Sure. Yeah. Well, we can have a pool then. I guess I don't think I see rates going up quite as aggressively as some of the forecasters. So I'd be below the forward curve.
Romy, I'm going to ask you the same question, but with a I'm giving you more latitude.
So
here.
I would say this time next year we'll probably see 50 basis points higher.
Right. What I'm really interested in is a longer-term time horizon, because when people make a house purchase decision, they're buying on an amortization of 25 years. Like, that's kind of what they're looking at. So they need to be thinking about that cash flow over the course of time. And with the challenge for people's incomes, they're not rising 10% a year to a large extent. So what do you model at CMHC for where rates will be from a conservative perspective in 5 to 10 years?
So in terms of, I think, I think what's interesting to think about is the stress test that we just mentioned.
Yeah.
OSFI 200 basis points.
Yeah.
Like, I think that's what OSFI is saying is, you know what, consumer, if rates were to go up by 200 basis points, can you still afford that mortgage? So
Yeah.
that's as good a prediction as any, as far as I'm concerned.
Tim, do you want to add anything here on the rates front?
No, I mean, it's a difficult question, as my colleagues just said, right? But you see where we are versus the American economy. While we're doing better in the greater Golden Horseshoe area, the rest of Canada not so hot. And so I don't see pressures on the national government to boost much more. Hard to guess from that. I do want to say, though, like, I appreciate we're kibitzing here a little bit, but to say that we're only interested in short-term sales, right? Like, if you agree with the stress test, fine. Mortgage rates coming up becomes increasingly cruel. But I think we're all agree we need to do something on affordability. And if it's not the stress test, you got to do something on the supply side across the board.
Absolutely.
And I think the lesson from our prevention campaign, we talked about it earlier on. My advice for provincial officials come June 7th, whoever the premier is, the three of us got to sit down, act right away on the supply side. More on the missing middle. Make sure you target infrastructure and intensify. Otherwise, whatever you do with the stress test, first-time buyers and upgraders are going to be in a lot of trouble.
Well, here's a question from the floor, and it is, what impact do you think the baby boom generation will have over the medium to long term? And I just came up with an idea right now, and that is to entice the baby boomers to sell their homes immediately by offering all of them all-you-can-eat cruising in the Caribbean. Just get them out of their houses, and then there's all this supply.
It could work, right? I mentioned the Ryerson study.
Done.
I mentioned the Ryerson study earlier on, and what Professor Clayton Ryerson said was the boomers are not going to move out of their houses till 2040 at best. Healthier generation, they've invested well.
They're not leaving.
They're not leaving their
Couldn't
homes.
we tell them they're filled with mold?
Yeah.
So just like,
Houses are better than they used to be, too.
Well, so like my parents are kind of on just pre-boomers, but they're similar to the older edge of the boomers, right? So they had the family home. My sister and I had moved out some time ago, but they kept the place, and it was just too much. But the challenge for them was trying to find a place that was adequate for them to go to in the same community where their friends were, where they could see the grandkids, and there just wasn't the supply. And that's why I think targeted initiatives for homes that will help boomers move out and millennials move in and free up the family home, that would be a real sweet spot for the next government to arrive at.
Stephen, I want to come back to something we haven't talked about, and that is the role of the investor. So one of the numbers that came out recently from one of the banks said investors accounted for 48% of new condos in the GTA. 44% of those were not covering their expenses. Yeah. So the rent that they were bringing in was insufficient to cover the mortgage payment and the condo maintenance fee and all that stuff. What are some of the dynamics on the investor piece of things that that you would note in this context?
Yeah, well, I think that's a very good point. I'm in a situation where I'm actually out with my daughter tomorrow looking at condominiums. She's 28, and I'm doing what you would call a pre-inheritance transfer, I think. And so I've been sort of looking at the market a little bit more than I would, and it really strikes me how expensive condominiums are. And so you look at the price and say, so it's $900 a foot, but what strikes me is how expensive they are is more on the rental rates they can potentially get. So you look at that, and I can draw two conclusions out of that. Are rents going to go up? Because you're right, they're not if you look at the equivalent cap rates, they're really reasonably low, and then or are prices going to come down, or a little bit in between? So I think that actually points to a little bit of the fragility of the potential fragility of that market, probably offset by the fact there's still. We get back to the strong metrics again, strong unemployment or low unemployment. People moving into the economy, there's a lot of demand for rental, and I think probably it's going to end up more rent. Probably rents are going to go up more than the prices are going to go
Romy,
down.
what's your take on that story? I mean, I look at those very simple numbers and get concerned about those investors' ability to carry those mortgages over time, if those are the economics that they're dealing with.
So what's the question?
So the question is, what do you interpret into the question of the stability of the investor market? Because if investors then feel like they can't make the money, suddenly there's a call, they start to sell, and that could put downward pressure on the condo market.
No, fair enough. And I think investors have played a really valuable role in creating supply in the market. So I don't want to diminish the importance of their role in the housing market. But I think one of the things that I like to sort of re-emphasize is the importance of purpose-built multi-unit rental buildings, because I think that's really where we need to focus in terms of not relying on condos provided by investors, but making sure that there is a stock of buildings that are built specifically for rental, run professionally by management companies. I think that's where we need to really focus on in Toronto, definitely.
I want to scoot quickly to one topic here. What are you seeing in terms of mortgage fraud? So we saw some headlines, Laurentian Bank, there was concerns from Standard & Poor's.
Yeah, so I run a mortgage loan insurance business, so fraud is obviously really important from a risk management perspective. We don't see any evidence of widespread fraud in the Canadian mortgage system, but we're always vigilant, and especially in an environment where there are escalating prices and people are being really stretched to qualify for mortgages. We are really vigilant about it, but to date, we don't really see, it's not really a source of concern for us.
I look at that as a little bit of the example that we've had to deal with 10 years of the fact that there was a market down in the United States, there was widespread fraud. Yeah. It had a huge collapse. The circumstances there were entirely different. And it's 10 years later and it's still the same story. Yeah. Mortgage fraud, it just doesn't exist in Canada on any type of scale for large lenders. It's not an issue that the insurers particularly discuss anymore. It's not an issue we discuss at First National. It's just most lenders have very strong due diligence systems that catch the fraud, and it's just not a big issue it's not on the radar screen.
Here's the risk, and I agree with Romy and Steve on this. And First National or MCAP and some of the banks are here, right? The area that's in the open market, very well regulated, honest people. There's a growing gray market, however, out there when it comes to mortgages. So people that run into the stress test or other limitations just don't stop, but they'll gravitate into the gray market where there are far fewer consumer protections. They'll pay far more towards interest than paying down the principal on their mortgage. Mm-hmm. See, CIBC is here, so Benjamin Tall, an outstanding economist, did a presentation where he's saying that he thinks that unregulated mortgage market may head as high as 15%. So that's I think, here's a good question.
Not true.
Okay, we'll put CIBC then against First National on this.
Absolutely, that'd be fair.
But there's a growth rate in the gray market that's of concern.
Yeah, no, I would say if you want to, so where people would move that, first of all, if you're borrowing at 3.5%, and the next step is, and you could afford $800,000, now you can only afford $750. Your next step is generally either an alternative lender or a mix. So if you're going up the mix, you're jumping from 3.5 up to 6, 7, 8. You just don't make that move. You tend to say, some people will, but most people will tend to say, maybe I can't afford that. Maybe I'll take some of my savings and pay that down. Maybe I'll go to mom and dad and help me out, or maybe I'll just wait, as what you would expect with the stress test. So to try to get a sense, just then the next step of where I was at a conference, and I discussed this. I would think the largest MIC in Canada speaking, the CEO was there, and she says, "Well, I think I'm the largest, and I have $300 million." And I think the other 5 or 6, maybe it's 100 million. So you're up to $1 billion. The Canadian mortgage market is 1.5 trillion. If the total MIC market, or I think was 1%, I'd be very, very surprised.
But the demonstration by CIBC, which I saw 2 days ago at Filter Quest that you were at, has it going high single digits into double digits. You may disagree, Steve,
I respectfully disagree, and this would be certainly conversations I've had widely, and I wouldn't agree.
We're rounding up towards the end of our time. Right. Stephen, I want to take us back briefly to the late 80s, in which the GTA housing market did not hold up. Right. It was a massive pullback in pricing. And one of the concerns that I have from a behavioral economics perspective is we live in a world where confirmation bias rules a lot of how we behave and how we think. Housing has gone up pretty much every single year since the early 2000s. Millennials have never seen anything other than what has happened, but you have seen another way that the market can go. What could you illuminate in terms of what happened then versus the life that we're in today that would underscore concerns you have or reassure you?
So I guess one thing, markets can come down, and certainly you could get situations where price in Toronto can decline. One thing people tend to associate with is, let's say, talk about the mortgage market thinking it's a real estate story. A mortgage market is you make a loan to a person secured by real estate. As long as they're employed, they'll tend to continue to make their mortgage payments. The difference that I would say in the late 80s, two things. We had severe monetary tightening. Rates were going up to double digits in the early 90s. That's one thing. We went into a bit of a recession, so we're going into a tough recession. So we had a tough recession during the early part of the 90s. We had high interest rates, had high unemployment. It was sort of all those factors tend to lead to a collapsed market. So that's what I would say would be the difference. And the difference, and of course, I'd advise anyone buying, you should be buying for the purposes of for home ownership. Don't think of it as an investment unless you're an investor, but if you're buying for the purpose of ownership, make sure you can afford it because, of course, over time, but these could have bumps along the way.
Stephen, Romy, Tim, thank you very much. Thank you very much.
Right. Thanks, Bruce. Great. Worked out well.
Great.
Yeah.
We'll pass back to
Wentworth.
there.
Worked out well.
I hope you all agree that this certainly didn't disappoint. It was a great dialogue, and it's wonderful to have different points of view and to hear some wonderful insights. The Canadian housing market is obviously a pivotal role in the health and the well-being of our economy. Market conditions create flux, and the impact, as you talked about, it can be felt across many parts of the economy and many parts of the communities as well. Romy, Tim, and Stephen, your perspectives, your insights were wonderful, and we really enjoyed hearing about them. Your deep knowledge, and you come from different parts of the space, obviously give us lots of insight and lots of perspective about policies and interest rates and supply and demand, and there's no one right answer, it seems. But we are reassured that the housing market is continuing to be strong and robust, and with people like you in the space, we're in good hands. So, and to Bruce, always full of energy and lots of great questions. Nobody is ever going to fall asleep.
And that's a good thing.
You are a wonderful moderator, and we hope you will be back again soon. So all of you, please accept our best wishes and a big thank you for your continued success and for spearheading us in the real estate sector. I'd also like to thank First National again for sponsoring today's event, and for mediaevents.ca, Canada's online event space, for live streaming today's event. So if you want to share and talk about it with your friends, it will also be on our website. To learn more about the club, you can go to our website at canadianclub.org. Thank you again for coming. Have a wonderful afternoon and a wonderful weekend.